different votes. This one, I'd say, would be one of them. Initially, when this was created or dreamed up, it was just for the greater Horseshoe area, which is basically the greater Toronto area and a little bit outside of that. But after that, it was expanded to include all of Ontario. So now, if you're a non-resident, you have to pay a 25% tax on the purchase price um, if you are non-resident. And this applies to all of Ontario. And there is an exemption. And just like as time has gone on, the exemptions have been reduced. So before, you could get the exemption as long as you had, like, if you're a spouse. But in terms of rebates, that has changed. So you can get you can get a rebate for the non-resident speculation tax if you became a permanent resident, if you were an international student enrolled in school, or if you were working here for at least a year. But since 2022, these two have been eliminated. So the only way you can get a rebate for the non-resident speculation tax is if you become a permanent resident. That's it. So you have 4 years from when you pay this tax, if you're non-resident, to become a resident and ask for a rebate at that point. Now we're going to get into the investment properties. So in terms of rental income, there's two distinctions when it comes to this. There's short-term rentals and then there's long-term rentals. So with short-term rentals, it's got to be something that's less than 30 continuous days. And if it is that, the CRA could consider this to be more of business income than rental income. And that has implications because if it's business income, then if you have too much sales, you have to register for HST. And if you don't charge HST, the government will just take 13% from whatever you did get if you should have registered and consider that as the HST component. So if you do have rental properties that are short term, and you're making more than $30,000 a year, it's very important that you consider this and you register for the HST if it applies to you. And there's a distinction here for non-residents. Non-residents must withhold 25% of the gross rent and pay that to CRA each month. There are options to change that to 25% of your net rent, but you have to elect with the CRA and the CRA has to approve it. The irony is that the CRA puts the onus of this on the person renting the property, not on the person owning the property. And goes the case for all of them because that for them, if you're a resident of Canada, if the person's renting it, more chance that they're a resident of Canada, it's easier for them to go after them than as opposed to a non-resident. If you have longer term rentals, so this is anything for rental agreements over 30 consecutive days, this is considered passive income and it has a very different implication. So if it's passive income, no HST registration. And a non-resident, same as with the short-term one, non-resident must withhold 25% of the gross rent and pay the CRA each month. And there's an option to withhold 25% of the net rent.